Today we're going to talk about Wyckoff asset allocation. But first, all investors should have a healthy fear of the markets. Risk is always present and not always controlled. Ground zero. Let the Wyckoff asset allocation be your control test or your base method for sector and stock selection. Compare this approach to how you currently select sectors and stocks. This is the single most important methodology to master. Your success or failure will be determined by how you allocate capital to risk markets. Wyckoff method asset allocation. Rules. Path of least resistance in the market is the trend. Current status of the trend must be acceptable. Entries are timed with turns of the market index or the Wyckoff wave. Sectors and stocks are selected that are trading consistent with the market trend, showing strong signs of relative strength, have shown periods of accumulation, a good cause, are showing readiness to move, execution of the effect. Select sectors and stocks in harmony with the market. What does this mean? It means select the best of the best, the most followed, the best market leaders, the strongest, the most popular sector and stocks. Why do this? Because popular sectors and stocks see their trend extend far beyond what you expect. The liquidity and volume present in the stock and option chains. Relative strength holds price up during wider market corrections. Negative news tends to be less damaging due to the love held by the crowd. Stocks making 52-week highs tend to make more 52-week highs. The Wyckoff asset allocation process asks you to focus on the leading index with the best sectors and the best stocks. If you move away from this approach and focus on Elliott wave, volume spread analysis, Wyckoff upthrust and springs, stock tips, technical analysis, and pattern scanners on their own individually, you are increasing your risk. However, one approach we do like, if it's encompassed underneath the Wyckoff approach, is cancelling. That's the William J. O'Neill approach, which is a derivative of the Wyckoff approach. Another risk factor to consider is the security selection. Consider base risk as the index, for example, the SPY or the S&P 500 ETF. A tick up in risk would be going to the sector. Another tick up in risk would be going to the stock. Now, to go long in these three elements is acceptable, subject to your own risk profile. However, going short, we suggest considering only the base, like a SPY, an IWM, a QQQ, or DIA ETF, rather than selecting the sector or the stock. For example, technology has been a strong relative strength sector. So is healthcare. Apple have been a strong relative strength stock within the technology sector. So is Amazon. Readtheticker.com provides the tools for the Wyckoff investor. Thanks for watching.